Most people have heard of the Federal Reserve. Most people know the names IMF and World Bank. But almost no one knows the name of the institution that sits quietly above all of them. Its headquarters is tucked inside a round concrete building in Basel. It looks more like a giant gray tower than a financial nerve center. In 1930, a small group of central bankers gathered there. They reportedly met in private rooms, they ate at the same tables, they used the same secure elevators. According to archived records, they were building something new. A bank that would not serve the public. A bank that would not take deposits from ordinary people. A bank designed only for the people who already controlled money. For years, almost nobody paid attention to it. It did not advertise. It did not follow political cycles. It did not appear in daily news, yet its decisions quietly shaped interest rates, currency values, and even the stability of entire countries. This matters because every retirement fund, every pension, every mortgage, every savings account is influenced by decisions made far above regular governments. Decisions that often begin in rooms most citizens never hear about. I remember speaking with a retired accountant who once visited Basel. He told me he walked past the building without even noticing it. He said it felt strange to think that some of the most important economic choices in his life might have started behind windows he never looked at twice. Have you ever wondered who actually sits above the world's central banks in this story? We're going to follow the quiet trail that leads to the institution many insiders call the most powerful bank on earth. The real beginning of this story does not start in Switzerland. It begins in the final months of the First World War. Europe was exhausted, factories were destroyed. Currencies were collapsing, and governments were buried under debts they could not repay. In 1929, a series of closed-door meetings took place in The Hague. According to archive notes, the conversations were tense. Germany was struggling to meet its reparation payments. France wanted guarantees. Britain wanted stability. And the United States wanted a structure that would protect international loans already issued by American banks. Out of these arguments came one overlooked detail. It was a proposal for a new institution, not a normal bank, not a government agency, but a place where central banks could settle payments with each other without interference, without politics, and without public scrutiny. This idea eventually formed the blueprint for the Bank for International Settlements. A tiny line in a long diplomatic document barely discussed by newspapers at the time, yet it quietly altered the global financial map. I once read an anecdote from a clerk who reportedly worked on the early correspondence. He said the letters felt unusually guarded, short sentences, careful wording, almost as if everyone involved knew they were building something that needed to stay low in the public eye. When you think about the world in the 1930s, do you imagine how many institutions were being shaped in silence while nations were focused on reconstruction? The early blueprint set the stage, and the next part of the story shows how this quiet creation gained its first real power. The first real shift in power came in the early 1930s. Archived reports show that central banks were facing a crisis of trust. Currencies were unstable. Gold was leaving national vaults, and governments were pressuring their own central banks to fund growing deficits. In 1931, Britain left the gold standard. By 1933, the United States suspended gold convertibility for its citizens. These were huge moves. They reshaped the value of money across the world, and they created a need for a place where central bankers could meet quietly, compare notes, and coordinate without political noise. According to insiders, the meetings in Basel began to change in tone. They were no longer only about German reparations. They became conversations about exchange rates, liquidity shortages, and emergency credit lines between nations. One small anecdote comes from a Belgian economist who reportedly visited during that period. He said he saw governors standing together in a hallway, speaking in low voices, as if they were discussing matters that could not appear in newspapers the next morning. Ordinary people at the time noticed different things. Workers saw wages shrinking. Farmers saw their crops losing value. Families saw savings accounts erode after each new currency decision. They likely never knew that some of these decisions were influenced by men meeting far from their own borders. Do you remember hearing stories from older relatives about sudden changes in currency or bank policies? These early gatherings marked the moment when the institution in Basel shifted from a simple clearinghouse into something with growing influence, and the next part of the story shows how its hidden machinery actually worked. To understand the machinery behind this institution, you have to picture something simple. Central banks needed a place where they could speak openly, share concerns, and move money across borders without the delays of diplomacy. The Bank for International Settlements offered exactly that. It operated under special legal protections, its records were shielded, its meetings were private, and its staff worked independently from national governments. The mechanism was straightforward. A central bank could hold accounts there. It could transfer gold, it could settle debts, and it could request short-term support from other central banks all inside one building, without a political announcement and without public debate. According to archived documents, this created a quiet channel of communication if a currency was weakening, if a bank run was spreading, or if a government was considering a sudden policy shift. The information often passed through Basel. First, one illustration comes from the mid-1930s, when France reportedly faced heavy pressure on its franc. Instead of going through diplomatic routes, French officials used the institution to coordinate with several central banks. They arranged support that never appeared in newspapers, yet it helped stabilize the franc long enough for lawmakers to regroup. I once read a note from a former staff member who said the most important meetings happened around lunch tables. He described how governors would lean and lower their voices, and trade information that could move global markets if released too quickly. Have you ever wondered how much coordination happens behind the scenes long before the public hears about a crisis? This hidden mechanism slowly expanded, and it prepared the institution for a consequence almost nobody expected in the years to come. The consequence nobody expected arrived gradually. It did not come from a single crisis or a single decision. It came from the way central banks began relying on the institution more than anyone originally imagined. By the late 1930s, the accounts held in Basel had grown noticeably, gold transfers between nations increased. And, according to internal records, the institution was settling transactions worth hundreds of millions of dollars in the currency values of that era. This growing activity created a quiet shift. Central banks now had a place where they could act faster than their own governments. They could move reserves overnight. They could coordinate interest rate changes. And they could discuss pressures that might take lawmakers weeks to even acknowledge. Insiders allegedly said that this speed changed everything. What began as a simple clearing arrangement was turning into a hub of influence, one where trust between governors mattered more than official policy statements. A statistic from a 1940 report shows how far this had gone. The institution recorded more than 1,000 gold settlements in a single year, a number far higher than analysts expected. Especially in a period of political uncertainty. I once heard a story from a Dutch banker who lived through that era. He said he remembered waking up to sudden currency changes. He told me people on the street never knew why it happened. They just assumed it was due to distant tensions. He later learned that many of those decisions were influenced by conversations that took place far from public view. Have you ever felt the effects of an economic shift without understanding where the first spark began? These early consequences set the stage for an escalation, one that stretched across continents and decades, and drew even more power toward the quiet tower in Basel. The escalation began as the world moved through the 1940s and 1950s. Nations were rebuilding. New alliances were forming, and financial systems were being redesigned from the ground up. The institution in Basel found itself at the center of this transition. According to archived correspondence, central banks used it to coordinate currency pegs, share details about reserve shortages, and prepare for the new monetary order that followed the Bretton Woods agreements in 1944. By the early 1950s, the volume of transactions reportedly surged. Gold shipments increased, dollar reserves moved more frequently, and central banks relied on the institution for rapid settlement, something their own governments could not easily provide. This period also saw new pressures. Countries faced rising debts, imports were growing faster than exports, and inflation began appearing in unexpected places. The institution became a quiet forum where these concerns could be discussed, long before any public statements were made. One small anecdote comes from a British economist who visited Basel during the 1951 sterling crisis. He recalled seeing officials arrive late in the evening, carrying folders under their arms. He said they looked exhausted, as if they had been negotiating for days. He only learned later that those discussions reportedly shaped decisions that affected millions of families across Britain. Numbers from central bank archives show how intense this period became. During some months, gold transfers reached levels not seen since the 1930s, and emergency credit lines between nations expanded in size and frequency. Have you ever noticed how economic changes seem to speed up during uncertain times? This acceleration pulled the institution deeper into global decision-making, and it quietly guided the world toward a moment when the entire structure of money would begin to crack under its own weight. The breaking point arrived in the late 1960s and early 1970s. It was a period when the world's financial system could no longer support the promises it had made. The Bretton Woods structure depended on the United States holding enough gold to back the dollar. But according to official records, the math had stopped working. Foreign governments held more dollar claims than the gold stored in American vaults. Pressure built quietly at first. France requested large gold conversions, other European countries followed, and central banks began meeting in Basel more frequently. Their conversations reportedly focused on one question: how long could the system hold? By 1971, the strain had reached a point where even insiders were unsure what would happen next. The United States faced rising inflation, growing deficits, and increasing doubts from its trading partners. Archived notes suggest that central bank officials in Basel could see the break coming, even if the public could not. One anecdote from that summer comes from a Swiss staff member who worked near the meeting rooms. He said he noticed an unusual silence in the hallways. Governors walked quickly, they avoided small talk, and their faces looked tense. He later learned that these were the days when discussions about the dollar's future were reportedly the most urgent. When President Nixon announced the suspension of dollar-gold convertibility in August 1971, the entire monetary system shifted in a single moment. Currencies began to float, exchange rates moved sharply, and the world entered a new era where money no longer had a fixed anchor. Have you ever wondered what it felt like to watch the value of money transform almost overnight? This breaking point did not weaken the institution in Basel, it strengthened it. And it revealed a hidden pattern that had been forming for decades, a pattern that becomes clear when you look closely at the history that followed. When you look back across the decades, a hidden pattern starts to appear. It is not a dramatic pattern, it is a quiet one, built slowly through meetings, conversations, and decisions that rarely reach the public. Each major global shift created more reliance on the institution in Basel. The Great Depression pushed central banks to coordinate. The post-war rebuilding made them share reserves across borders. The Bretton Woods era tied currencies together. And the collapse of that system in 1971 made coordination even more essential. According to historical records, the same rhythm repeated. A crisis would emerge, central banks would gather. Information would flow through Basel, and new forms of cooperation would rise from those discussions. You can see parallels in earlier eras, in 1931 when Britain left the gold standard, in 1949 when the pound was sharply devalued, in 1967 when sterling faced another major crisis. Each event created sudden movement in currency values, and each one reportedly led to emergency communication between central banks inside the same round building. The pattern is simple when viewed from a distance. When national systems weaken, transnational coordination strengthens, and the institution that sits outside elections and public pressure gains more influence. One historian once wrote that central bankers valued the building in Basel because it offered something rare: continuity. It did not change with each political cycle. It did not shift with public opinion. It simply remained quiet, protected, and available. Do you notice how often stability depends on institutions that most people never see? This pattern continued into the modern era, and understanding it helps reveal the long-term consequences that shape our world today, consequences that become clearer when we look at the decades that followed. The long-term consequences of this pattern reach into the present day. They shape how money moves, how crises unfold, and how central banks make decisions that affect people far from any meeting room. After the 1970s, new challenges emerged. Oil shocks hit global markets, inflation surged across continents. Interest rates climbed to levels that strained households and businesses. According to public records, central banks coordinated responses through the same channels that had existed for decades: quiet consultations, shared data, and discussions about how to prevent panic. In the 1990s and early 2000s, another shift appeared. Financial markets grew faster than regulations, cross-border capital flows expanded, and new technologies allowed money to move in seconds. The institution in Basel became a place where central banks compared risks, reviewed early warning indicators, and discussed vulnerabilities that were not visible to the public. Statistics from this period show how interconnected the world had become. Foreign reserves reached record highs. Global debt expanded significantly, and financial assets grew at a pace far above global GDP. Then came the crisis of 2008. Interest rates were cut around the world. Swap lines were opened between central banks, and liquidity was injected into markets at an unprecedented scale. Much of the cooperation that made this possible had been built through decades of meetings in Basel. You can still feel the echoes today. Mortgage rates rise and fall, currencies strengthen and weaken. Savings accounts gain or lose value, all influenced by decisions shaped through networks that began long before most people were aware they existed. Have you ever noticed how economic changes feel global even when they start far away? These long-term consequences lead naturally to the final question: what does all of this mean for the world we live in now? And how should we understand the quiet power that continues to operate behind the scenes? The final takeaway is clearer when you step back from the individual events. Across nearly a century, the same institution remained present while governments changed, currencies rose and fell, and financial systems were redesigned again and again. Its influence did not come from speeches or public mandates, it came from continuity. It came from relationships among central bankers. And it came from the simple fact that someone had to coordinate the world's money when national systems collided with global realities. One historical echo stands out. In the 1920s, economists struggled with unstable currencies and rising debts. In the 2020s, many countries face similar pressures: high public borrowing, volatile exchange rates, and growing concerns about inflation. The conversations that help navigate these issues often take place in the same building where earlier generations gathered. The meaning of this story is not that one institution controls everything. It is that power gravitates toward the places where information flows fastest, where coordination is easiest, and where decisions can be made without the noise of politics. It invites a final question. How should we think about institutions that hold enormous influence yet remain outside the attention of most citizens? The answer shapes how we understand the past and how quietly the foundations of our financial future continue to be built. Thank you for spending this time exploring a story that often stays in the background, a story about quiet rooms, slow decisions, and the people who shape the financial world without ever appearing on nightly news. When you look at the decades together, you can see how much of our economic life depends on institutions most of us never encounter. You can also see how steady patterns form beneath moments that feel sudden and how history moves through calm hands. As much as dramatic events, it makes you wonder, what other parts of our daily lives are shaped by places we rarely think about? If you enjoy stories like this, and you like understanding the hidden structures behind world events, feel free to join us for the next documentary. There's always another quiet chapter waiting to be uncovered.